What's going on, EGA Tribe? Welcome back to the EGA channel where we plan to trade and trade the plan. That's right, you don't have to do the market breakdown, we will do it for you. Welcome into another episode of the Daily Brief as we embark on this bull market. We have had an insane rally in tech, which was a combination of different things with all the keyholes lined up and perfectly turned to enter this new era of a possible melt-up. Let me point out a couple of things for this trading session today that may or may not help you, and I hope that it works out for you. But right before we continue, make sure that you smash the like button on this video, and if we do get to 50 likes, I do have a surprise for you guys for the next week. So if you can, take a second out of your day, smash the like button, subscribe to us if you haven't. We do this every single day for your viewing pleasure. All right, let's get started with the Daily Brief right now. So we did see majority of bulls securing a very key pivot point on the S&P 500 within the last few trading sessions. The 422 level, which was the main level for us to hold, has been held strongly, and now we are starting to pivot above the 425, 426 level, which will be the next key resistance for us to break out of. Upside extensions into the 61.8 extension from this level is going to be at the 434 level, which we will see if we can get to in the near couple of weeks. Summer tends to be a very bullish, calm market for the S&P 500 seasonally, and so we expect that this market will continue to chug along. We do see, however, a couple of important things on the technical side that we should go through. So let's get this charts breaking down without a frown and peel this onion. So looking at the S&P 500 over here, we can see that we have now started to move higher and higher into this breakout pattern. This is a key level of resistance here that we've been watching for a little while. And once we do break out of the 426 level, we're going to be riding up a fresh bull wave. We do, however, see a possible near-term pullback either now or a double top formation here before moving back down to the 422s and then ultimately breaking out. These are two separate scenarios that could happen as we continue in this market. The reason why we are more bullish than usual at EGA is partly because we see retail traders pretty much net short in the market right now. In fact, retail trader data shows that 33%, as you can see by this IG client sentiment report, 33% of traders are net long, with the ratio of traders short to long 1.95 to 2. Therefore, there are more than 2 times traders short than there are long, which means that the market may continue to melt up. This might cause a potential short squeeze, which is the main essence of this entire daily brief today. I think very possibly that market makers may use this situation to push prices even higher, forcing shorts to close out their losses and push this market into a completely new territory to the upside. After which impulse buying will continue, and we should see a complete melt up on the upside. Now, this is a complete bullish scenario if that really does happen. I'm not saying that it will happen. All I'm saying is, based on the important information that I have collected, it seems to me that a lot of people are betting on bearish outcomes. If you yourself in this past week has found yourself thinking, oh no, this is too good to be true and we need a pullback, you would have probably bought some puts to secure your positions. How do I know this? Because I did it too. The point I'm trying to make is that you can take small hedges that are out the money, which is what I did, and I just kept holding a small percentage of my portfolio, right? Like, for example, this week I bought a far out the money strike with the S&P 500 and I set a 30% stop loss on it, right? And that position itself was down $150 yesterday, but the net gain in my portfolio was up $3,000. Therefore, the net gain offsets the very small net loss, which is how you should be hedging your portfolio. Hedges are like insurance contracts, right? You wouldn't buy insurance until unless you really need it, right? And so it's always good to stay insured, and you wouldn't cancel your insurance if you don't see, like, for example, if you buy a car, you don't just cancel your insurance because you don't get into an accident. So you should always hold insurance, and just in an event where a market pulls back abruptly, you're prepared. So I will be continuing to buy hedges, and I will be adding to my positions. I'm holding some VIX options now because they're very cheap, and I will continue to add positions as I go along. As we break above this level and we hit the 23.6 level, I'll add more hedges, and then if we hit the 38, I'll add a little more hedges, right? And you just keep adding hedges along the way, and you collect them not insane amounts. Remember, like, my hedges make up barely 5% of my portfolio, right? a very small percentage, it's like taking another trade, right? And then when the market comes down, your hedges all pay at once, and that's the beauty of it. When it comes down, your hedges pay, you use those profits to take another batch of long positions, right, through the correction, and then ride the next wave to the upside, right? So that's the idea of hedging. Great. So the S&P 500 targets are up here in the 434 level, which is the 61.8 Fibonacci, 432, which is the 38.2 Fibonacci, and we have 430, which is going to be roughly the 23.6 Fibonacci. So we will be looking for a break, a retest, and then an upside slide if we really do truly get the melt-up situation. If we don't get the melt-up situation, we're going to get rejected right here and come back down into the 420 or 422 level, which is the key pivots to hold. Okay, that will set us up to rebound back to the upside. That is the case on the S&P 500 in terms of technicals. Great, let's move on to the QQQ. So this one's on another trajectory altogether. We saw now consecutive days of bullish action. This is a huge wave up. We need a wave down on the QQQ to sustain this action. Therefore, at this point now, we think that there is a high possibility that we come down to the 344 or 348s for a quick dip before moving to the upside. This level right here, which is what we are approaching, is at 352, is the 61.8 Fibonacci extension from the previous wave. So we do see that this is a possible reversal level before we catch our breath and then move to the upside. If we do break this level at the 352 and we continue to run to this upside and we have that melt-up situation that we were talking about, then what will happen is we will bounce on this level and we will probably head up to the 364s, which is the psychological level and the top of this long-term channel that we're seeing on the QQQ. So these are the levels that I'm watching on the QQQ. It is also a good idea if you are heavily invested in tech to possibly take hedges against the QQQ. So you should probably look for some 340 puts in the short term or some 344 puts in the short term so that you can secure a hedging position against your portfolio. That is my recommendation. Next up, we have the ARKK. This one hit all of our targets. If you have been following this daily brief, we talked about ARKK breaking out a couple of weeks back and it hit out 23.6 Fibonacci extension, followed by the 38.2 and now finally the 61.8 where we are seeing a rejection. Majority of the ARK funds are the ones that are pushing the QQQ up because they are generally disruptive companies. We're seeing a pullback here and possibly we may see a recovery back to the 122s or 120s before moving to the upside again. So we will be looking at this to either short this position and in cadence with this, go with a short position on the QQQ in the shorter term. This would be a nice little wave down for us to catch our breath before moving to the upside once again on the ARK fund. Of course, remember, we could just as easily break out into all-time highs, but however, I will be extremely surprised if we get out of this huge resistance zone, which is at the 130 level. That would be extremely, extremely bullish, and that would send us all the way up into uncharted territory here. Next up, I have a breakdown for Boeing and an update. We had a nice breakdown on Boeing where we said that we would bounce at the 236. We got the perfect bounce and now we are moving back to the upside with a corrective wave inbuilt and we are looking for a break of this 256 level. Once we do break the 256 level and break this key resistance up here after this wave has gone up, we are looking for the first technical extension at the 23.6, which is going to be roughly 264. Once we do break the 264, the upside targets are going to be 272 by the next couple of weeks. So therefore, keep your eyes peeled on Boeing as we continue to make this wave up and we continue in this bull market with lots of bullish pressure. This stock is severely undervalued, so make sure that you get in on the action when on the pullback and not try to chase the rallies when you are actually seeing it run. Next up, we have Netflix, which we broke down a couple of days back on throughout this week. And we spoke about how it was forming a very bullish trend and broke out of this falling wedge. Just today, Netflix broke through the 38.2 Fibonacci extension pre-market, and I'm glad to announce that we finally officially hit our second target. The third target is going to be at the 530 level, which is going to be the next 61.8 Fibonacci extension, and I hope that some of you guys played this trade. We have called out so many bangers on this channel in this past 2 weeks. I don't think there is not a way that you didn't make any money just attending this daily brief. So I'm really happy that we have been really hitting these trades on the nail. So congratulations. And if you have made some money with us, please drop a comment and let us know. We love hearing from you and we love to see your growth. Next up, Tesla. Another banger with this one. hit the 61.8 Fibonacci extension perfectly after breaking out of these pattern that we were talking about. How crazy is this? We had this pattern drawn out from this level when we were here. I did mention we would have a pullback back to the 600s, then a wave up, another wave down, and then a extension, and that's exactly what happened here. Wave down, wave up, wave down, pull up, and an extension straight into the 61.8. This was a beautiful setup, and we definitely played this one this week. I made almost $3,000 off Tesla this week. This has been a great week, and I will be looking for a break and a consolidation above the $700 level to find some basing here. I do feel like this wave has gone up a little too abruptly, and so I want this to kind of calm down right above the 700 price level. And once we do see that, I will be playing this up to the upside all the way up to the 790s, sorry, 780s, which is the resistance right over here. That is the previous resistance, and there is also the level at which we will see a lot of sellers step in. So I will be looking for Tesla in not anymore now, because I want that the majority of market makers to start trapping other players while I look at other stocks and start investing my money into where the money is flowing. Now, to break it down, Chinese stocks which are on the move, we have been calling this out for months, right? If you have been watching this channel for a long time, we have been talking about the Chinese rally, and I think it is almost here, right? So BABA has broken out of a long-term downtrend. We are looking at consolidation here. A move above 220 and a consolidation above 220 is going to be bullish for this one. We do have this stock as severely undervalued. We just did a valuation of the stock today, and it's still $311 in terms of the 10-year discounted cash flow based on EBITDA. So we are looking for an upside target all the way at the 250s here in the next couple of months. Next, JD breaking out of the technical downtrend and moving to the upside just with the rest of the Chinese stocks as well. We like the targets up at $80. We have taken calls for this one. Just wanted to point it out that it is halfway there. It is not a bad idea to enter this on a dip. Kweb, as a result, moving much higher today, up about 2%, and the day prior about 2.45%. We're seeing a lot of money rotate into Chinese tech, and if regular tech pulls back, we may see money flow into this very severely undervalued market. And that's all I have for you guys in the technical breakdowns today. So I hope that this helps you out. Let's do the market conclusion and get things wrapped up today. So on the market action for this past week, we have been seeing an extremely bullish market with lots of money flowing into tech and a lot of money leaving the financials and the industrial sectors. We now see that money has been overheatingly entering this market, and we are looking for a pullback of some sorts for this market to run even higher. However, do note that I mentioned that this could turn into a melt up as traders are increasingly bearish. Retail traders may get trapped here and end up closing up their shorts, causing a wave of buying, which is going to be a short squeeze. And this may or may not happen, but I'm just pointing it out that it is a possibility, and this market could become completely turbulent and volatility can be completely spiked. I do like the idea of holding VIX options through this time, and therefore I will be adding more to my position today. I wish you guys well on this weekend, and I hope that you guys have a great one. I'll see you guys back on Monday for another daily brief. Take care, and I will see y'all on Monday. Bye.